Welcome back to the Dividend Diplomats YouTube channel, everyone. Got Lanny, Bird here, the Dividend Diplomats. We are about to talk to you about two stocks, and we are putting them head-to-head in the Dividend Diplomats ring right here, everybody. So buckle up, get ready, let's go.
Bert's pumped up, and you know what? Smash that subscribe button. Give Bert the Hurt and Lanny a nice thumbs up. Turn the icon blue. Ring the bell, because you don't want to miss a beat from your boys at the DD. You know what I mean, Bertie?
Yeah, we're ready to go. We're amped up. We're trying to pump to you as much dividend news, dividend stock analyses, where we talk about whatever range of dividend stocks are out there. So everybody, please subscribe to our channel if you haven't already and help us get to that next big milestone, because we hit 10K recently, and I bet you can't forget that video we pumped out.
You better believe it, brother. But today, as Bert said, we've got two dividend stocks that we want to really pit against each other, really to find out which one is the better stock to buy right now. Maybe it's one, maybe it's both, maybe it's none. But that's what we're consistently doing here in the stock market. We are trying to analyze dividend stocks. I know there's a lot of comments in the videos of stocks they want us to analyze. We promise that they don't go unnoticed. We are doing our best to keep up with just content that we've had listed out on a project plan, but also incorporate some of what you guys want to see and hear from us at the DD.
Nope, exactly, Landy. And truth be told, sometimes the stock battles and the videos come from stocks that we're just interested in researching ourselves. So you kind of see our thought process and see how we're going through it to see if one of the stocks, two of the stocks, or to your point, none of them are stocks to buy, and then you just move on to the next one. So hang tight.
Sometimes Bert just chugs 5 natty daddies and forgets where he is.
It's going to need to be at least 10 before I start forgetting what's going on around here. But what's exciting about this sector here is this kind of bubbled up from one of our recent videos where we talked about a dividend increase from this company. So we wanted to pit them against one of their major competitors to see which is the better undervalued dividend stock.
No, exactly, Bert. And again, the stock prices that we are using for this video are as of August 31st, the last day of the month. You know, again, if you haven't caught wind of what's happening out there in the stock market, the S&P 500 is now even higher than what it was last Friday of the 27th. Again, the S&P 500 is on fire year to date, already up over 22%. So if you just invested into, VOO or some form of the S&P 500 ETF, which that was the Vanguard ETF, you are doing very well this year. This isn't a video about Vanguard, but we just want to say, if you stayed invested, if you didn't time the market, you're doing very, very well in 2021.
And that's why we're always looking for those undervalued dividend stocks, no matter how hard it is and how hard the market increases. So what we do is we run the companies through the Dividend Diplomats Dividend Stock Screener, which has 3 simple metrics and a bonus metric that we look at. Metric 1, price to earnings ratio less than the S&P 500. Metric 2, dividend payout ratio less than 60%. Metric 3, a history of increasing your dividend, where we look at how many years in a row a company has increased its dividend and its 5-year average dividend growth rate. And lastly, that bonus metric we will take a look at is the dividend yield.
Because the yield is so good.
Yes, that's exactly why. But we'll find out whether the yield is that good for these two companies that we're looking at here. That's the fun part of running these companies through the screener.
Now, Bert, do you own both of these two dividend stocks that we are here to talk about today?
Just one, and my wife owns one of them. What about you? I believe you own both, right?
Oh, I do own 2. Oh, it's true. It's damn true. I've owned both of them, I think, for kind of a long time. Gosh, I wish, you know what I need to start doing in my dividend stock tracking spreadsheet is probably put the year that I purchased them, just so I can look back and see the real fruit from the labor over here.
Yeah, can't ever hurt, can it, everyone?
So, Bert, what industry are you here to talk about with these 2 dividend stocks out here?
We're talking heavy equipment, construction equipment, farm equipment, and even some equipment that's large for individual households. At least one of the two companies is going to specialize in them. I bet you guys know exactly the two companies that we are looking at today.
Or you're like, even equipment that needed to unclog my toilet after I left the bathroom.
Always got to go there, Lanny. But that is not the case, everybody. Let's just get into these two companies before Lanny continues going down this path here, because he will keep spiraling, everybody. That is for certain. These two companies, we're going to talk about Caterpillar, ticker symbol CAT, and John Deere, ticker symbol DE. For me, I know I mentioned we only own one of them. My wife owns Caterpillar. We do not own John Deere like Lanny.
Wow. So John Deere and Caterpillar, two dividend stocks. Obviously, Bert, you hit it on the head. Very heavy in construction, machinery, John Deere farm equipment. There's not a day here in flat Ohio where you don't see one or both of them out there doing something.
That's exactly right, Lenny. And it's road construction season too, as we all know. So those Caterpillar machines are out flying everywhere. But what's nuts about these two companies is even though they've had strong past performances, which we'll get to in a little bit, the government just passed and just announced a $1 trillion plus infrastructure deal with another potential one coming in there. You have a lot more road work. Yeah, that's exactly it. You might need to keep going doing that for a long time, Lanny, to cover the money that's going to be printed for this infrastructure bill. But Caterpillar and John Deere are set to benefit because you're going to need all of their equipment. You're going to need all of their machinery to support the spending that's going to come as a result of those bills.
Yeah, they may win a few contracts here from some of those contractors. If you haven't caught the last video on, Sunday, the Sunday video, we talked about a dividend increase from John Deere. They're not one, but second dividend increase in 2021. So, Bert, how did you want to kick things off looking at these two beloved dividend stocks?
Let's just jump right into the stock screener. Let's look at that first metric here, the price to earnings ratio. Again, price as of August 31st. Let's start with John Deere. John Deere's price was $378.03. Divide that by their forward earnings, which we pull from Yahoo Finance, which aggregates the average analyst estimates for each of the company. So we think that gives us a good baseline for the PE ratio. You take the 378.03 divided by their earnings of 1892. That gives you a PE ratio of 19.98, which is below the S&P 500. How does that compare to Caterpillar, Lanny?
Well, Caterpillar currently trading at $210.87. Again, analysts are expecting $10.19 in forward earnings. That leads to a price to earnings ratio right now on a go-forward basis of 20.69 times those earnings.
So both the companies are pretty comparable here. There's not really too much of a difference, although John Deere's is slightly lower. I'd say they're pretty much about the same. Nothing significant from at least what I'm seeing.
Finkel is Einhorn. Einhorn is Finkel.
Yep, that's exactly what it is. Let's move into metric number 2, dividend payout ratio here. Again, we look for a payout ratio of less than 60%, but we think that perfect dividend payout ratio is between 40% and 60%, because that's the perfect balance of a company reinvesting its earnings in the operations and rewarding shareholders. John Deere's annual dividend after their second dividend increase of the year was $4.20. Divide that by the 1892 expected earnings. That gives you a payout ratio of 22.20%.
Right, like you turned that some bitch sideways, and it just sounded like you're about to go, the Rock on us right there. I love it. Or was that? Yeah, it's the Rock. So Caterpillar. Wow, I don't know if we can even stand a freaking lick to John Deere's 22%. I use lick. I'm trying to get into that foreign language over here. But 22% is going to be hard to beat from John Deere. So Caterpillar, they do have a dividend of $4.44 or $1.11 per quarter. Dividing that over the forward earnings of $10.19. They do have a perfect payout ratio, which is great to see, at 43.57%. So again, a good split between reinvestment back in the business, but increasing and keeping that dividend safe for you shareholders, baby.
What's nuts here, at least with John Deere from that perspective, is they've increased their dividend now twice in the year, and their payout ratio is still only 22.2%. So they still have a ton of room to keep announcing these massive dividend increases going forward. But
Wow.
so does Caterpillar too, because they have that perfect payout ratio. Both companies are looking great here.
Wow. Yeah, you're spot on, bro. That's why that John Deere payout ratio is pretty tempting here. But okay, so that's the second metric. For you want to dive into the third metric with John Deere on the dividend growth?
Yeah, absolutely. John Deere's dividend growth is a little bit different here. It's never quite a consistent mark here, much to Lanny's chagrin. They don't have that consistent every 4 quarters. They announce a dividend increase. Sometimes it's 4 quarters, sometimes it's 8, sometimes it's 9. There is a long-term trend of increasing that dividend, but it's not year consistent here. So it's going to be hard for them to find themselves a dividend aristocrat until they announce a consistent annual increase, which can be seen as John Deere's announced it for one consecutive year.
But it's a circle.
But with that, their 5-year dividend growth rate is 6.92% here. So, which is insane considering the two massive dividend increases they just announced. What about Caterpillar, Lanny?
Caterpillar, so they are technically a dividend aristocrat, correct, Bert?
That is correct.
I think they hit that in 2017, 2018. So they're at that 28-ish plus years of consecutively growing that dividend. Caterpillar is just churning and burning. But the funny part is though they technically increase it every year, their 5-year dividend growth rate on average is actually less than John Deere, slightly at 6.55% versus at 6.92% of John Deere's.
It's crazy. So, I mean, you can kind of see that in their recent dividend increases too. Caterpillar's increase this year was about 7% versus John Deere, who just announced a 16.7 increase, which was their second one of the year, which was on top of it another double-digit one earlier in the year. So what was it? It was over 34% dividend growth for the year for John Deere. It was like 34-ish%, I think. Something insane.
It was a big dividend increase overall for 2021. Essentially, it blows most dividend stocks out of the water this year.
So again, though, Caterpillar may not have the flashy double-digit dividend increases this year, but they have that consistent 6 to 8% dividend increase, which is nice, and they have that much longer dividend growth history compared to John Deere. So I'd say Caterpillar gets a big check here from me in the competition.
Well, Bert, so now that we've gone through the three metrics, what does that dividend yield look like?
Interestingly, let's take a look at John Deere here. Their dividend yield at this time is 1.11%. So even with their large dividend increases, their yield is still lower than the S&P 500, which is usually between 1.3 and 1.5%. How does that compare to Caterpillar?
Obviously it's about 2 times that. It's at 2.11% on the dividend yield. So, slightly above the S&P 500, which you can argue is about 1.3 to 1.5% right now in today's market. So you're getting a little bit better yield here than John Deere and the S&P 500.
I mean, it makes sense. Caterpillar's payout ratio is 43.5%. John Deere's payout ratio, 22.2%. Caterpillar's dividend yield is 2.1% compared to John Deere's 1.1%. Double the payout ratio, double the yield. So it's rare that it works out just like that.
Double your pleasure with double mint gum.
Exactly, Lanny. So interestingly, let's just take a quick look at how the stocks have performed, because why not see how they're doing? Because maybe that's why John Deere's yield is so much lower too. Year to date, John Deere's up over 41%. And over their last 52 weeks, they're up 73.66%. Insane. What about Caterpillar?
A bad year. Not a bad year for Caterpillar. They're trailing the S&P 500 year to date at 15.77%. But on a 52-week basis, Caterpillar is up over 44%, which actually does outpace the S&P 500. So not pacing with S&P year to date, but outpacing them on a 52-week basis.
Again, insanity. It's insane that Caterpillar is up 44% in the 52 weeks, and they're still way behind John Deere, who is up almost 74%. But both companies are.
Yeah. And I remember when Caterpillar was kind of beat up at one point. Do you remember that, Bert?
I do.
I think you and I were talking about it pretty heavily. Dang it. But still, I mean, Bert, what do you think about both of these? Is anyone kind of tweaking your interest right now?
I mean, for me, John Deere, yeah, the dividend increases are great, but the fact that their yield is below the S&P 500, their PE ratio it's not a significant discount to the broader market. It's kind of slightly below, but it's not a screaming buy, like a 10 to 12 PE ratio, which would have my answer being different. So I'm going to hold off on watching John Deere, but congrats to everyone who received that massive dividend increase. Caterpillar is interesting. They're still not the cheapest. Yield's not the highest for me right now, but I love the consistent history. I love the perfect payout ratio. And I think if their PE ratio starts to fall down or their price continues to fall, I would be much more inclined to add Caterpillar to my watch list at this time. What about you, Lanny?
Yeah, I think I do agree with you. It's been hard to obviously anytime to re-up on a new allocation to them. Now, if I agree with you, especially on Caterpillar, if Caterpillar, and this is going to sound like, no, it's never going to happen, but if they had like a 10% correction, if they drop like $20 per share, your yield gets closer to that 2.5% mark, that PE gets below 18. I think they start to look a little bit better in that 180 to 190 range.
Yeah, anything's possible. 10% drop could easily happen here. I mean, it's just good to know your price and know where you enter. That's part of it. That's part of the research piece as well. You don't have to buy every stock we cover. It doesn't have to be let's go get it tomorrow. Sometimes it's a little
Wait,
overpriced where I want it to be.
you haven't been buying every stock we've talked about?
Yeah, no, my bad, everybody. My bad. But I think it's a fair price. Could happen. We'll find out, Lanny. So everybody, let us know. What do you think about John Deere and Caterpillar? Do you like one, both, or none? Which was the initial question that we were asking here. Let us know in the comment section. We're pumped up to hear your thoughts on these two companies.
And if there's a dividend stock battle that you'd also like to see, again, leave it in the comments and the feedback below. We'll add it to our, nice list that we have going here. Again, if we had time in the world to record videos all day, believe me, you'd be getting dividend stock battles on the hour. Again, I think it sounds like Bert's going to kind of just watch and monitor some of these stocks, not really on what Bert, but you wouldn't say they're not in the top of your list right now.
No, nope.
I respect that. And yeah, I would agree. Same with me, but hey, let us know if you guys are watching them now, or if this video has helped you make a decision to either buy, watch, or just hold. Definitely appreciate you guys for stopping by. Don't forget to like the video if you haven't already. Subscribe to the channel. But that was your boy Bert and Lanny from the Dividend Diplomats. Over and out.